We are approaching the end of the year, and the Toronto Real Estate Board just recently released the November statistics, and they are not pretty. I felt like I was repeating myself, although the numbers in November are actually a worst month of the year. But let me explain why this is relatively consistent and pretty much expected. If you are one of those people who are sitting on the sidelines and wonder what is going on, grab a coffee and let's have a talk about it right after this. Hi there, welcome back to the AV Team Real Estate channel, and as usual, I'm Antonio, the local real estate agent in the GTA. If you don't know by now, I post all related real estate content in Toronto. If you find this helpful, please like and subscribe to our channel so that I can keep creating videos just like this. And of course, if you're looking to buy, sell, or invest, feel free to book a call with me with the first link in the description, or simply call or text me at the number on the screen and I'm happy to help. Let me explain why this has been the worst month in 2022 so far in terms of sales. Take a look at all the transactions so far from January until November. Clearly, we are witnessing the lowest sales in a month in November with 4,544 in total. If we compare that to the peak month in March 2022 at 10,955 and the current sales in November at 4,544, that is a significant drop of 58%. I also included the data for the year 2021 as a comparison, and you could take note of how the interest rate hike has affected the real estate market. Since March, almost every month has dropped by about 50%. Frankly, I don't think December will be any better, and in fact, it will probably go further down since there was just a new interest rate that was raised by 50 basis points in December 7. If the current trend continues, I believe the number of transactions in December will be in the 3,000s at most. Did we not expect that? Of course we do, especially if you are a subscriber to that channel. I sound like a broken record, but we are certainly not going to see prices bouncing back anytime soon. I noticed that some of the feedback from my past video is that it might have gone too in-depth, and therefore I would like to make it a simplified version of the most important region in the GTA to give you an overview of how the sales were impacted during the year of 2022 compared to the peak of the year. Starting with Halton region, that will include Burlington, Halton Hills, Milton, and Oakville, and we had a total of 1,135 sales during March at the peak and have steadily gone down since the rate hike to 431 in November, which was a 62% decrease. Peel region, which includes Brampton, Caledon, and Mississauga, had the most sales outside of Toronto, and it peaked at 2,107 transactions in March and had the biggest drop in November at 748, down 64%. Moving on to Toronto, which includes all area of Toronto, West, Central, and East, the total sale was 3,981 during the peak and was down to 1,798 sales in November, with the lowest percentage down at 55% out of the regions. Then there's York region, which had 1,921 sales in March but only 832 in November, a 57% decrease. And lastly, we have Durham region with a total of 1,390 sales during the peak and down to 564 sales in November, down 59%. Overall, we have approximately 60% fewer sales across the board. Now let's take a look at the Toronto Real Estate Board average prices for all homes types combined, meaning that these averages include all homes and condos, apartments, and also included the month-over-month changes. As you can see, the year started strong in January at 1.24 million, with a positive change of 7.34%, keeping the momentum from last year, and another strong month in February, which was the peak of the year at 1.33 million, with another positive change of 7.38% over the previous month. And since March and the first interest rate increase, we have seen the first month-over-month change decline, down to 2.6% to 1.29 million. Following that, we had 6 consecutive interest rate hikes, and not surprisingly, we see a steady month-over-month decline. But the most significant decline occurred in July, with the highest decline and the shocking 4 basis point. However, since July, we are starting to see average prices stabilizes at 1.07 million. In fact, it has slight positive change month over month and maintains the same average price in November. If we sum it all up from January to November, we see a drop of negative 5.99%. Now, I will walk you through the average prices per major region in the GTA in the past 4 years. We can see that there will be an average price increase to to 2020 in each region throughout 2019, but the most significant increase would be from 2020 to 2021, especially in areas such as Houghton. We've seen almost a 300,000 increase over the year, and the York region was up similarly. People moving away for remote work caused the smallest increase in the Toronto area at about 117,000, and Durham had a modest increase at about 235,000. After the incredible price increase in 2021, we have finally seen prices come back down after the interest rate hike. Average prices have started to trend down to 2020 prices, but not just yet. No doubt prices will continue to be under pressure. Will it reach below 2020 average prices? I'm curious to hear about your opinion, so feel free to leave it in the comments section down below. As for the new listing compared to a year ago in November, we have fewer new listings on the market, from 10,044 to 8,880, which is down 11.6%. Active listings were up from a year ago in November, that is from 6,086 to 11,910, where many listings are either not selling or taking much longer to sell. I hope this can provide you with a snapshot of what is happening in real estate in the GTA. If you are interested in learning more details about the Durham market update, you could also watch this video using this link, and I also have another video that I made previously for the area in York region as well. As we are approaching the end of the year, we have experienced highs and lows so far, and the negative impact of the interest rate will likely remain in the near future. We will still have to see what happens in 2023. Having said that, I also mentioned that the Bank of Canada also announced for the first time in history that they were losing an estimate of $522 million in the third quarter since the interest rate hike. In other words, it's not only you as a homeowner who is struggling, but Canada is as well. They are primarily looking to combat inflation at a desirable level, but at the same time, they are also struggling with the national debt. However, they made it pretty clear that they would rather sacrifice the real estate market industry overall for this time, and hopefully we could see some light in the second half of 2023. Who knows? Let me know what you think, or simply leave your predictions in the comment section below. It would be really interesting to see how it turned out next year, and here's hoping you have a wonderful holiday and a new year, and I'll see you in the next video.